And we are live. Welcome, guys. We have an amazing guest today, Mr. Shayon, and then our amazing founder, Shashank. Before we start, if you guys allow me to read a little disclaimer. So, although our guests this week are investment partners of Registered Investment Advisor, any comments on industry performance or opinions are not guaranteed. Nothing in this podcast should be considered an offer of Multicoin's investment advisory services or should otherwise be confused for investment, tax, legal, or any other financial advice. I hope I explained it well. And with that, welcome.
Yeah, hey Shayon, nice to have you, and great to have the disclaimer. It would be weird if people took it that way. It would be great if you could tell a bit about yourself, how you started your journey in VC, and we can take it from there.
Yeah, thanks so much for having me, Shashank. Excited to be here and jam all things crypto and AI. So as a bit of background, I'm a general partner and the co-head of our venture business at Multicoin Capital. I've been with the firm for about 5.5 years, doing everything from super early stage, seed to pre-seed style investing, all the way to kind of working on our liquid fund and participating in the public markets on our hedge fund side. For those who aren't familiar, Multicoin operates both a hedge fund and a series of venture funds, we're sort of in the billions in AUM across all of these different vehicles. And I've over my time at the firm focused, I think, on two specific layers of the stack. I'd say one is things that are very close to the L1. So, L1s themselves, MEV markets, block-based auctions, LSTs, bridges, interop solutions, things that are very close to the metal. And then the other is things that are very explicitly at the application layer. And by that, I mean things that very clearly try to own the customer relationship. So wallets, consumer applications, even broader definitions of that. So things like deepins and internet labor markets, really primitives and applications that try to own the end relationship with the consumer and try to use crypto rails as a way to permissionless transact value, and in some cases create value in the world. And so, happy to go into any detail, or happy to start however you'd like. Hopefully that's a quick overview.
Yeah, sure. First of all, congrats on your recent promotion. Glad to see you, bro.
Thank you very much.
By the way, did you get started in your career through Multicoin, or did you work somewhere else and finally decided?
Yeah. So I initially, my story is takes quite a few turns. I went to college to study pure mathematics. I thought I was going to be an academic. I thought I was going to go down and get a PhD and go down that academia path. And then I realized about 3 or 4 years in, when I started taking graduate level classes, that that world was not for me. And at the time, folks were kind of going into banking or tech or consulting, and I had a couple of friends who were working on early stage companies. Had always been interested in the idea of starting a new business, and so ended up working in product at a bunch of early stage startups, a bunch of larger companies as well, and ultimately, when it was in sort of like the summer of 20, or maybe spring summer of 2020, which is when DeFi summer was really taking off, that I remember the specific event. It was watching compound farming take place that I realized that crypto was a fertile ground to kind of build companies. And at the time, I sort of had this inkling that I wanted to build a derivatives exchange, a perpdex, and kind of thinking through that market structure and thinking about how I would approach that problem. It was around that time that Kyle at Multicoin had put out a post saying that they were hiring for an analyst. And so I'd never invested before. I'd only ever been an operator, considered myself an operator. But I reached out. I kind of wrote the way the process works at Multicoin is you have to put a piece of writing together, and the bar is that the piece of writing should be as good or better than any of Multicoin's blog posts, and that's been a really big part of how Multicoin has built and established its brand or its reputation over the years. And so I wrote about a specific protocol. It was actually Perpetual Protocol, which was a AMM-based perpdex. It was built back in the day. Turned out Multicoin had invested in that company, although it wasn't public yet. And so, I ended up speaking with the rest of the partners, and I was fortunate enough to be able to come on board and work with the team. As someone who had never invested before, I was kind of not hesitant, but like really seeing investing as sort of a way to kind of see what's happening on the other side of the table, so that I could come back and potentially operate in the future. 5.5 years later, I'm quite confident that I'm never going to be a founder again, be an operator again. But I still think of my role as a venture investor really more as a operating partner for our companies, which is to say that the investments where I feel that I've done the most work, or I've been able to kind of generate the most alpha for our funds, have been the ones where I am intimately involved with our founders on an operating basis. So I continue to have that operator sort of mentality as it comes to investing, but now I can just do it across our portfolio of companies as opposed to one individual bet, which I candidly find a lot more exciting. So
nice. And I think Kyle has written about this before, like several times, how Multicoin is structured a bit differently from traditional VCs. So yeah, I want to understand a bit more, because usually in the VC teams, there's separate teams for each of the sectors. What I've heard about Multicoin, it's there's no sector specific per se. Each team can do whatever they want and bring in deals from any sectors they feel comfortable in. So yeah, like happy to learn a bit more about that.
Yeah, so I mean, I'd say the first thing to keep in mind is our investment team is quite small relative to the size of the funds that we manage, and that has positive implications for a few reasons, which is the more you work with a small group of people for a long period of time, the more you understand. You sort of develop your own language internally, your own shorthand for communications, and your own kind of style. And I think having a tight-knit environment that essentially, I'd say that the single most important value on our investment team, in my opinion, is just this idea of intellectual honesty, which is you can, be willing to entertain both sides of of any given claim, and for any given claim that you are making, you should have run down at least 3-4 lines of argument for or against it before feeling confident in making that claim. And so naturally, given the small number of people, it's very difficult to kind of set up a process where people are running some sort of pipeline or managing in a covering a specific sector or specific area. The reality is everyone kind of has their own path for sourcing and evaluation and support and all of the things that a investor is expected to do. But everyone sort of has their own style. It's not to say that we don't have broad focus areas. So for instance, Spencer on our team spends a lot of time on core DeFi infrastructure. I've spent a lot of time on our DeepIn portfolio and trying to figure out, broadly coordination infrastructure and using these rails to enable new consumer applications or new types of networks, demand-driven networks that are user and contributor owned. So like we all have our own niches, but as a result of the team being smaller, I think everyone basically largely proceeds by pursuing their own curiosity more than anything else, which is at any given time, what is the state of the market? What is our view on, what are the businesses that are in a good position at this point to be formed, to compound, to be beneficiaries of some tailwinds? And, as as everyone knows in crypto, the market evolves so quickly. There's nothing, whatever claim you made about the market 3 months ago stopped being relevant 2 months ago, So it's kind of, as a result of how quickly it's moving, you sort of have to have this dynamic set of interests and this dynamic way of approaching the market. I think our investment team does a very good job of that. So, yeah.
Nice. And that's the thing about both crypto market as well as AI market. There were a lot of assumptions when AI was just catching up. The first set of models had launched, and everyone had their own set of ideas how the industry would evolve, what would be more important, what would be more important to the labs, the adjacent projects, and so on. And crypto has its own dynamism as well. So when you combine it's with crypto x AI, it gets multiplied, and whatever you believed about the sector like last week, it kind of it changes now. So how would you say the your fund's thesis has evolved over time, say from 2023 to now? Like, are there any sectors you thought were going to be super important but not as important right now, and some things you thought you could never think of but are like super important?
Yeah, totally. So I think the way to address this is to start with a blog post that Kyle and Tushar and Multicoin team put out, pre 2020 even, called Crypto Mega Theses, and it defined kind of three core areas for the opportunity, in crypto. The theses at the time were non-sovereign money, open finance, and Web3 broadly. And at that time, the fidelity into these topics was quite low, right? Like there wasn't broad stablecoin adoption. DeFi was sort of coming together. We had essentially no regulatory clarity of any kind. All of the core on-ramp, off-ramp infrastructure was still super, the number of players that you see today relative to then were substantially smaller. And so, at the time, it was sort of trying to chart out what is this technology useful for? What are people going to do with this? And I would say to varying extents, all of those theses have come true. Some have moved faster than others. For instance, open finance and DeFi are, I would say, have found significant product market fit over the course of the last kind of 6 or 7 years. Non-sovereign money has been a concept that, obviously originally in the context of Bitcoin, but potentially in the context of a bunch of other assets where, faith in centralized fiat currencies is kind of like on a general decline. And, people need ways to store their wealth and do it over permissionless global capital markets that are 24/7. And so to some extent, that has been successful as well. Even in the Web3 stack, which is this idea of decentralizing a lot of the infrastructure that most of the consumer internet or even the enterprise internet runs on today, has found product market fit to varying degrees, but generally a little bit slower, right? And I think the one through line that we've observed from looking back on those original theses is, crypto really is a system for moving value and money around the world. That is what its core function is. And to the extent that it is used, in a bunch of different applications or in these different environments, it is most useful for moving money around or moving value around, and then creating applications built uniquely by the ability to move that value around at very low costs all over the world, at very low latency, and permissionlessly and 24/7. And so, over the past kind of 3 months or so, my partners and I have tried to kind of rethink from first principles, what do we believe the core opportunity for crypto is at this moment? Because we live in a very different world today than we did 6 years ago. All of the core primitives that I was describing earlier are 1 to 2 orders of magnitude better and stronger. We have regulatory clarity. We have stable collateral assets. We have really, we have hardened DeFi protocols and primitives that are moving, billions and billions of dollars every single day. We just live in a meaningfully different world. And so we put out a thesis post, I think this was in early February, essentially laying out 8 core thesis areas. I'm happy to kind of go through all of them individually, but I'd say the broad buckets of that were, this idea of fintech 4.0, the DeFi mullet, entertainment finance, non-sovereign money, new forms of kind of credibly neutral blockchains, cryptographic primitives, and new forms of borrow lend protocols, and a handful of others, right? So we basically try to carve out individual pockets in the market where we think there is a very clear and concrete opportunity for founders to go after, or founders are already going after them and they're compounding aggressively. But I do want to be clear that to some extent, we investors like us, we have a pulse on the market and we understand what's happening here. But these companies are built by founders. Like the founders, deserve all of the credit that comes with all of the innovation that's happened in this industry. And so we, for instance, we would never have like come up with the deep end as a concept, right? Like it required Amir to come to us and say, hey, I have this idea, and for us to work with him to figure out that it was possible to use crypto rails to incentivize the build out of these capex heavy infrastructure networks. And that one investment that we worked and partnered with him on sort of created this new category. So there's always new things. I don't mean to suggest that like the core areas that we outlined in our thesis post are exhaustive, and that's where the market is going to be exclusively. But we think these are clear and concrete, and then there will be new things that come from founders building new companies and experimenting with these primitives that we're going to be incredibly excited about. And I think just one last comment to add here is, I think given some of the AI tools and maybe some of the work that you guys are doing, the amount of the cost and friction associated with testing an idea, bringing it to market, and building a company is 1 to 2 orders of magnitude lower than it was even 6 months ago, right? Like the amount of money it would take to build a company, a simple product, the amount of time and money it would take has been compressed so much that I think we're just going to see so much more experimentation from people who are curious and happy to spend a weekend in Cursor or Cloud Code and try to just build out an MVP and test it out in the market and see if it's worth proceeding. And I think that's just going to be incredibly generative, both in terms of building new companies within our core thesis areas and completely net new things that we've never thought of before. So that's an opportunity in the market that I'm quite excited about.
Yeah, definitely agree with that. But if we talk specific to AI, what opportunities did you think were relevant back in 2023? And what do you think has changed, and what is more relevant right now, specifically for crypto X AI?
Yeah, I think broadly, these are very complementary technologies. I would say, that is the core sort of resource aggregation element of this, where, if you're trying to essentially build new models for sourcing core commodities related to AI, so things like bandwidth or compute or storage. We've seen different instantiations of using crypto incentives to build out capacity for those types of things. And so, you'll have your compute markets, you'll have your bandwidth markets, you'll have your storage markets that are incentivizing these types of new things. But that's sort of like at the core low-level infrastructure layer. I do think there's a real, universe of opportunity around specifically verification, which is, in a world where there is a abundance of AI-generated content, being able to attest to the authenticity of a piece of content or the identity of a human in a world, in an internet where the vast majority of the people interacting are actually not people, they're robots, right? Having some form of cryptographic verification that this person is real, or this image or this object is real, extremely important. I think we also had a handful of experiments that are quite early, but still evolving around verification of compute workloads themselves, which is to say, if you are running, a specific inference call, you want to make sure that your responses are not being tampered, if you're in a mission critical capacity. Now, obviously, if you own, if you're running these models on premise and you own the hardware and you can trust the hardware, then you're okay. But, at some point in the supply chain, if things are getting messed up, you want verification of compute around, what what operation is being done. So I think the opportunity there is also super interesting. And then last is obviously, and I'm sure this is the kind of domain that you guys are focused on, is this idea when you give these AI systems more tool use and more skills to go out and act on behalf of yourself, or in the future act of their own volition, of their own accord, if they want to do things themselves, how do they end up transacting in that world? Which is, if there is economic value moving between you and an agent, or an agent that has its own sort of its own balance, right? I think the things, the standards that are being built around this, the X402s, the MPPs of the world, these are really interesting primitives for a world that I certainly believe in the next 3 to 5 years, which is an internet dominated by agent systems as opposed to human systems. So transactions in that world are almost certainly going to occur over crypto rails, but there's also this element of using core cryptography and cryptographic primitives to ensure that the operations, the things that those agents are doing in the world are sufficiently verifiable, meaning they're true and they're doing the right thing. So look, at many different points in the stack, I think crypto and cryptography are extremely important to the build out of AI, and I think they are, the one of the biggest TAM expansions for crypto is going to be through AI agents, right? Like, it's going to be through these systems kind of running around and transacting on the internet, and not to mention the fact that like every piece of software, every piece of code written going forward is likely going to be, is going to be in natural language, right? And if it's moving money, these systems are natively going to say, hey, I prefer like not dealing with all of this clunky, traditional finance architecture for moving money around. We're just going to do things on crypto rails. So yeah, I think there's like a bunch of different dimensions to this question, but we're seeing promising pieces of progress across all of these different domains. And I think usually in this type of environment, you start at the lowest point in the stack. So you start at the resource aggregation layer, and then you go up and you mature into the consumer application layer later. I think we're roughly following that trajectory right now.
Do you agree with Hasib's thesis that AI agents will be the biggest users of crypto and not humans? Because for agents, it's easier to go through the code, just go through the on-chain program, see what it's doing, identify any issues. Whenever they need to do anything, they can just read the smart contracts, figure out what needs to be done, and do it themselves. Whereas for humans, we need better UI. It's difficult for us to go through transactions, especially when there are multiple of them. There's so many chances of hacking. So yeah, do you agree with that? Fully, partially, not at all?
Yeah, look, I think it's entirely possible that is the state of the internet in 3 years, right? That you just have sort of this delegated authority given to this system that knows your preferences and has the permissions to act on your behalf to do things in the world, whether that's booking a flight or buying a meme coin, right? Like I do think that world is going to exist. I think the path to getting from where we are today to there is, I'm certain that it's going to happen. I'm less certain of the timeframes themselves, because these systems are still, they're not deterministic, right? They're still clunky. They will make mistakes in ways that and not know they've made those mistakes. I think these are solvable problems, right? As model capacity improves and model tool use improves, and the behavior of these systems becomes more predictable. People will over time become more comfortable delegating authority to them. But like, if you think about like an agent that's job is to schedule meetings on your calendar, for instance, depending on who you are, the stakes are pretty high for that. But if it's moving money around on your behalf, the stakes are extremely high for that. Like, it's almost the highest bar Anyone someone is using their dollars to do something, it is the highest signal, and it's the highest kind of it is the type of activity on the internet that requires the most safeguards and the most trust. This is why fintechs over the course of the last 20 years have been built around this idea of trust and fraud, and minimizing the latter for the end user or the enterprise. So I think we're going to get there. It's going to take time for these systems to mature such that people feel comfortable moving things around. Then there's a whole world of like, hey, maybe there's no human in the loop at all. These agents are just running off, doing things on their own, creating economic value. Again, I really like this. Like, I'm an optimist. I like the sci-fi futures as much as anybody else, right? It's very hard to, I would say, like, make very concrete investments, or even build concrete companies for that world, because we just don't know what it's going to look like, what the shape of that is going to be.
Yeah, and I mean, it's difficult to be not an optimist and still be in VC, right? You have to believe in a future that's going to exist, and then only you can make investments. So yeah, makes
Totally.
sense.
Yeah.
I'm going to say a statement that I believe in, and happy to hear your thoughts on that. I believe proof of correctness of the output itself is more important than proof of compute, because even if you give me proof that you actually executed the query well and the output is wrong, which can of course be, I mean, it's still useless to me. But even if you ran my query on a worse of compute, but the output is correct within some bounds and some way of evaluation, it's still useful to me. So happy to hear your thoughts on that.
I'd say I generally agree with that. I think it also matters what the context it's in, right? Again, like, if I am on ChatGPT asking for a bolognese recipe or something, right? The stakes are quite low. Doesn't really matter. And, a customer is not, I as a consumer am unlikely to pay some amount of money to say, hey, can you prove to me that this recipe was untampered with when you were generating it? Like, it's probably not going to happen, right? But if you are running a mission critical workload, for instance, you are you're designing an aircraft, or building some sort of critical infrastructure, or doing something sensitive for the government. In some cases, you're going to be able to run that stuff on premise. I think as these models get larger and larger, in some cases you're not, right? And in those cases, like, being able to, there are different configurations of this, right? Like, there were folks trying. I remember back when ZKML was like the thing, right? Like, you're just going to run the entire computation inside a zero knowledge circuit. And like, obviously, like, that makes the cost of the compute blow up by like 2 or 3 orders of magnitude, right? You can't, doesn't actually work, right? But there is something between that and, either using a TEE or using some other form of, trusted assumption to know that the thing was done correctly, right? I think ultimately what matters is the user, the person at the other end of the inference call has some guarantee that their response was not tampered with. And again, it's going to be a very small percentage of use cases. It candidly probably matters more for financial use cases than it does for anything else, like, at least at the consumer layer, right? And so I'm actually curious to get your opinion on this. Like, how do you think this nets out? Like, is this, do you think cryptography is like the way this gets done? You generate proofs around that, or do you think it all just happens locally and like on-prem, and like the people who actually care for guarantees just have to like figure out how to source a huge amount of compute to run it themselves? Yeah, I don't know. What are your thoughts on, like, how do you think this is going to play out?
So I usually look at the type of errors that I'm interested in. The first kind is that the query itself didn't run properly. I didn't send the right query to the LLM, or the LLM, a smaller version of LLM was run, so my output was bad in that way. Um, the second kind of errors are when the LLM ran properly, but the output still wasn't right. Um, the I'm more interested in second kind of errors, because the first ones are like you can do lot of stuff, and it's the same issue that people have had with cloud. So lots of enterprises use clouds. Even at Goldman Sachs, they care a lot about their data, because it's an investment bank plus other kinds of financial data. But even they use cloud providers like AWS, and they have their contracts in place to ensure their data remains secure and everything runs fine. And you have to put trust somewhere. But if your output is wrong, even if you tell me that I ran everything properly, uh, I just don't care, because I'm finally interested in the output. So I believe being able to check if the output is within some bounds, it follows some restrictions that I wanted it to be in. So, for example, I'm doing a transaction through an LLM, and I can always verify that it's only going to be certain subset of wallets that it's sending money to. The money is always less than a certain value. It only interacts with a group of protocols and not anything else. So those kind of guarantees would be more useful to me, rather than just telling me, okay, I ran your query properly in on the cloud. That is useful, but I would say from a consumer angle, I'm more interested in making sure my query runs properly, rather than cryptographic proofs saying, yeah, everything on the tech side ran correctly.
Yeah, that's super interesting. That makes sense. That makes sense to me.
Yeah. Also, you wrote an interesting post about how the future, it will be about humans working for AI agents, and not the other way around. So yeah, happy to share it with our listeners.
Yeah, totally. I think you're already kind of seeing this. Maybe saying humans are working for AI agents is a bit hyperbolic in today's state of the world. But I think you'll find that like an increasing amount of human labor, both today and going forward, is going to be essentially in service of training these AI systems. And so, if you think about like what are the bottlenecks for AI systems and agents to kind of create economic value in the world, the bottlenecks are in tool use and interacting with the world, and like running into these hurdles as they're interacting with the world. And you can create an agent today and it'll go off and do its own thing, but then it'll run into some roadblock somewhere. It'll run into a captcha page, or a payment terminal, or a DDoS error or something of that sort, right? Like there'll be a bunch of points at which they get stuck. And that blog post that you're referring to is kind of a precursor to another blog post that I wrote about a year later called Internet Labor Markets, where it's my view that these systems, there are all these bespoke things that you have to do to make these systems better, whether it's collecting data or responding at a certain moment to help the system get better. There are all these small things, small actions that everyone's going to have to do to make the system better. And that is going to, my view is that the only way to source those inputs into these systems at scale is by creating incentives for doing those things. And I think that's going to happen through cryptographic or through payouts on crypto rails, right? And so this is the way you can think about it, is essentially like the business that Scale or Surge run in terms of sourcing data, but moving up the stack, right? Like you can look at Mercor in that lens as well, but they're not hiring people to sort of label two images. They're looking for more and more specialized labor. And I think it'll continue to increase that way, where like essentially everything that you do is fodder for the AI systems in some ways. It sounds dystopian when I say it, but it's kind of the only way that the systems get better, right? Like, it's not like you're going to have a good legal agent if the agent hasn't like talked to and responded with like 50 or 100, or just like hundreds of thousands of hours of interaction with like the people who are best in class and what they do in that field. And so essentially what I'm trying to get at there is, you end up working for these systems, and then maybe at some point it becomes autonomous, right? And maybe at some point the human in the loop is not really even there. But that's sort of like, that's probably a lot further out than the world in which we're just trying to improve the capabilities of these systems through contribution.
That's nice. And I truly think we could get there sometime. So help me understand if I'm learning this right. So if we divide that help from humans into two parts, one of them would be training data to help AI learn better, and the second one would be more of a real-time help. So an agent is browsing the internet and there's some captcha, and it's like, bro, I can't do anything about it. So can you come in and just do this captcha for me? And the agent can move forward. So that's more like real-time help. The second one is more around training data, where the agent wants to learn how to navigate Amazon. So there's this human who is going through Amazon, doing some things, and the agent is learning the actions and able to do that again. And even within that, there's more of expert data, because AI agents are pretty good right now. They can do all sorts of basic stuff, probably at 99th percentile. Now they need more expert information, those edge cases, or like very specific information, which probably only few thousand people in the world can provide. And so they're going to use that and become better. I guess in the first one, where it's more real-time data, it's mostly because internet has been made for humans to use. So we have those things in place where it tries to identify if you're a human. But as more and more agents increase, the internet will be more agent-friendly. So you probably won't have those things to block agents, because then you're losing money if agent is not able to access your protocol, your website. In the second category, where the data is for training, I think the first one could be abstracted out as agents get better and better. Then they can do RLHF. They can do reinforcement learning, do several actions, figure out if they were actually able to do what they wanted to do, and over time learn from that. With expert data, I think there is no easy way out. You need those human experts to come in and guide it like a teacher, like Plato, to, bro, this is what you should be doing, and this is what you should not be doing, and that's how it gets better. Yeah, did I get it right, or is there something?
Yeah, no, I think that's a much cleaner. Yeah, I think you segmented it correctly. I think in my view, like it does kind of fall into those categories. Maybe there's things maybe a little bit more bespoke than that, but the flow that I'm describing in the first case is really just sort of like, if you're on Cursor and you're trying to build something, and you run it and you push to production and you figure out that, like, oh wait, here there's like a bug here. And I have to go and like go in there and like solve that thing and like create that, set that variable differently, or unhook this thing, or figure out something else, right? That action itself has value in the debugging flow over time, right? And so over time, if systems are able to kind of learn from that, that what I was describing is just like one specific instance, right? But these agents are going to do 10,000 different things in the world, right? Whether it's where you're trying to index a piece of information on the internet, or run a business, right? Like whatever the thing is trying to do, you're going to run into all these issues. And I think that around the time that OpenClaw was coming out, there's this sort of you have these peak moments where people just like go. There's obviously Moltbook and rentahuman.ai, where you could like see just like pay out stable coins to people who will just do things. And I looked at that platform, and I was like looking at the types of jobs that were being offered, And most of it was still funny. It was like,
Yeah.
go wave this sign on a street somewhere or something. It's unclear what
Oh,
production value that has. But I think that is a very interesting direction that this goes in.
Yep.
Like, I don't know of a specific like most of the experiments we've seen are in that second camp that you described, which is generating training data, right?
Yep.
Whether it's through a specific set of workflows or, some set of, like sourcing specialized labor, right? For specific training functions, pre-training functions, or in some cases, both, fine-tuning post-training functions.
Yeah.
But that is a cleaner problem, because what you're doing is you're aggregating this data, you're giving it to someone who knows what they can do with it, and it's like, great, deal done. But in the first case, it's real time. It's like in production, right? It's happening live.
Yep.
And you need this sort of like labor kind of on demand, like on hand, available and ready to do it for you. And we've seen early instantiations of stuff like this, but it's not in production yet. And my guess is when it is in production at scale, and a lot of people are using this stuff, those guys are going to get paid out over crypto rails. They're not going to get paid out via the traditional methods.
Yeah. So what would you say is the biggest advantage of crypto or the biggest role for crypto to play in internet labor markets? Is it more about bringing tokenization so users can be paid in advance and the value can accrue later? So you're kind of writing a loan against the future value generated from that protocol. Because if you want to do it using normal payment rails, you have to pay in advance, but the value comes in later. So there's kind of an implicit capital requirement, whereas on blockchain, you can get away with it for some time by issuing a token and then generating the value later. Of course, it's the blockchains are better sources of transactions. It's faster, cheaper, and so on. So where do you think it's the biggest advantage?
Yeah, totally. Look, I think there's a few different ways you can slice the problem here, which is what is the function of the labor market? What is and you can look at that in terms of a few different dimensions. You can look at that in terms of how large is the unit of work? Is the unit of work something like a contract that takes 3, 6, 9 months to fulfill? Or is it something that you do in 5 seconds, right? You can look at it in terms of what is the skill level of the contributor, which is this is this someone who is highly skilled and one of 1,000 people in the world who can do this function? Or is it something that, basically anyone in the world can do? You can look at it in terms of what is the frequency of payout that is expected for that contributor, which is to say, for this type of workload, is the person who's doing the work, do they expect to get paid immediately, meaning as soon as they do the work, or are they happy to kind of hold off and figure out when they can get the work later? Does that contributor want to get the payment? Do they have a preference for getting, dollars, meaning they have expenses to pay, or do they want potentially ownership in a network that is they're playing for upside, right? This was sort of the core deep-end thesis, right? There are many different dimensions with which you can look at labor marketplaces. I think these are a handful of them. And I think my view is that depending on the specific configuration of those variables, your network will look very different, right? Helium is a functionally very different marketplace to Grass, is a functionally very different marketplace to, something like, like Arkham has like these information bounties, right? Where you can like put up a bounty and people get paid for putting that information. Like these are all very differently structured, but the same thing is happening, right? Someone wants some function done somewhere in the world, and then someone in a completely different part of the world has seen that opportunity, showed up, and done it, right? So inherently, crypto is useful there because these two people in the world would maybe never have matched or known that they exist if not for the fact that the internet exists. Now, to get them paid, it's just natural to do that over crypto rails, whether it's happening, whether they have to get paid out every 3 seconds or they get paid out every 3 months, right? But I think where it becomes really interesting is like when you're not just using dollars, you're not just moving, because like people, like marketplaces have existed for the longest time, right? I do think you will have a new set of marketplaces that are, that were not possible in a world where you could only pay people out on fiat rails. But the ones that I'm really more interested in are the specific types of marketplaces where the contributors really want ownership of the network, right? Like, you need a new capital asset to source the supply necessary to solve a problem for demand. And the supply is happy to get paid in that capital asset. They're basically taking a moonshot, right? Anytime someone is building a DeepN, they are, they are silently subscribing to this world that this network will be successful because I'm getting paid in this token, and I need it to be valuable. And so I need to, and that has that has its own implications for a bit, marginal cost of sourcing contributors, wanting the product to be successful, things of that nature, right? But my view is that like there are going to be all these types of functions. The more the more demand for data or these types of resources increases, people will have to build these networks where you can't just source the contributions in dollars because it's just too capex intensive. Or maybe you end up in a world where there's 5 companies who can build these networks, right? The people who have trillion dollar valuations, like those people can, like Google can do anything at any given time, and that's probably fine. Like maybe there are things that even Google can't finance or medical finance, right? But I think that crypto is most interesting for solving those types of moonshot problems where you kind of need the contributors to feel like they're owning a part of something that could be very big because it's too difficult to source just with dollars, right? And the resource that is being aggregated or the function that's being done is so bespoke that people just you just have to do it that way. So,
nice. Yeah, I mean, that's an interesting way of looking at it. And the funny part is, no way, doesn't matter how you slice, all of those cases can be handled on chain. If you want to get paid in stables, you can get paid in stables. But the more interesting stuff of actually getting a buy-in into the network and getting a share of the future value is only possible on chain. So yeah, I guess that's the more interesting part. Yeah, so we're almost out of time, so I want to move to the rapid fire round. Adil.
Hey, so these are some of the more fun. First one is for you, for our guest Shayon. So everybody probably is thinking the same thing, and the question is, what's the worst pitch you ever heard?
I don't think we can.
Pass. I'm gonna pass on this one.
Just
All right.
anonymize it a bit. Just say like the top. What was it about? Was there anything funny about it, or?
It's just like not what I do. So I'm not gonna do this one. Thanks.
I was thinking that. So plan B is there any traits from founders that earn your respect?
Look, I think the at the seed stage or the early stages, the thing that we look for most is just really is just clarity of thought, which is the sense that when I'm talking to a founder, they have thought about the question that I'm asking them for like 1,000 hours, and they know every contour of like my argument or their argument, and like they just have real mastery in their domain, and they're able to articulate it in a way that is clear and concise and logically sound, right? I think that is the most strong signal for a founder at the early stages, is the ability to articulate and communicate what they know about the world to someone who is not an expert in that world. At any given time, any founder is always more experienced than me in whatever they're building, right? They because that's their life. They're spending their life building that, and I'm necessarily not spend that much time. And there are some cases in which it shows, and there are some cases in which it does not show. So I think just being able to have a really strong clarity of thought, I think is the thing that I respect the most.
This is very insightful. Thank you for this. And question to our founder, Shashank. Did building Fraction AI force you to change any pre-existing belief you had before? like something you're thinking the world is like this and changed it?
So a lot of my friends, like college friends, are founders, and like before even starting Fraction AI, I was going through YC summer courses, like listening to Brian Chesky and others. So I had a bit of a head start there. So I would say the most important thing is have like a vision, but don't get stuck on ideas or experiments, because you have to try a lot of things, and if you get attached to one thing, you kind of lose time there. So like have a vision on what you want to achieve, but keep it broad enough so you can try out a lot of stuff, bring it to market fast, and then iterate from there. And especially with AI right now, you can experiment faster than you ever could. So yeah, that experimentation and learning from that experimentation, taking actions, and then rebuilding from there is ever more important.
Okay, so question from now on, questions for both. So this is for both of you. Is there like something about AI that you thought it was something and became the opposite? Like, for example, the speed of innovation faster than you thought, or something's gonna come, like, and didn't come yet?
I mean, look, I'm just constantly surprised by the rate of improvement in model capabilities. Like this is not particularly controversial or contrarian take, but like I think humans in general are not very good at understanding exponentials. Like just life evolves in linear formats, but I mean, like seeing Opus 4.6 versus Opus 4.1, like the models of a prior generation, seeing how much better it actually is, even going from, I was playing around on Christmas break, and you compare the state of like a single prompt to build something then with now,
Mhm.
it is order of magnitude better.
Yeah.
And it's very difficult to see how, the implications of that over the next 3, 6, 9 months. I don't see that trend slowing down. It's just intuitively very hard for a lot of people to understand. So and me included. So it's going a lot faster than I expected.
Yeah. Okay, just a bit of anecdote here. So we used to train AI models back in university. I was more in computer vision, so it was training neural nets to identify what's there in an image, describe that image in the best way possible, and so on. Uh, and once we had this course about natural language processing, and one of the assignments was solve try to do this sentiment classification using neural approach and non-neural approach. Neural approach is what we have with LLMs right now, and non-neural is bag of words model, which used to be before. And almost everyone in the class got better results with older models, the bag of words, and it was kind of a consensus that those models are working better right now. But just few years after that, we had foundation models which were like trained on all the text we had on internet, and they were writing sentences which were not very good, and I was like, yeah, sure, they are good but not that good. And suddenly they started writing good sentences, and then they started writing code which was bad, and then suddenly they're writing code that works, and now they are writing whole software in just a single line of prompt. So yeah, it's even when you are going through the papers, understand how it works underneath, the the progress is just insane. I mean, yeah, it's just difficult to imagine how it where it goes from here.
Yeah, especially like a few years from now. So talking about the future, not the present. And since the theme of today is like AI agents in the workforce, how do you see the relationship between AI agents and humans in the workforce? Like co-workers, or do you think they're more like middlemen? For both, I mean.
Yeah, I mean, I think you're already seeing this, right? Like the agent counterpart to any sort of high agency employee in the world, they like those people are substantially more productive today as a result of whether it's Cloud Cowork or Cloud Code or just even just like the consumer chat interface. The fact that you have this, I think when you say when you say agent, I think it implies not just a chatbot, right? Even though, like, I'd say the vast majority of interaction for most people is still interacting, through some sort of chat-based interface, asking questions or getting responses. But increasingly, at least in my personal experience over the course of the last 2 or 3 months, I'm just handing off things to the agent. So to Cloud Cowork, if I had to go and poll, for instance, earnings for a specific company over the last 3 quarters, I'd have to go source the data, put it in Excel, chart it out. That whole process would take 3 to 5 minutes. And now you don't even think of it in terms of minutes. You think of it in terms of like number of tokens needed to get that output through Cloud Cowork. And the vast majority of that specific type of task has gone away from me. I don't do that. I don't make charts anymore. Like Cloud Cowork makes charts for me. And that is one example of a thing that I used to do 6 months ago that I no longer do. And my expectation is that in 6 months, there will be 10 more examples of those things, whether it's scheduling meetings or auto responding to emails or, just a lot of this low hanging fruit that people kind of need, like booking flights. I don't know. And so, I do think it's going to be more like it is an assistant to you in the near future. And then look, at some point, once the capabilities improve, it'll maybe shift where I'm working for it. So we'll see how that plays out. But for now, I think it's going to work for me.
I would say earlier it was more like developers had some sort of superpower that they had kind of a spell book where they could do things which others couldn't even think of, and AI just was like, yeah, I just tell me what you want to get done, and I have that spell book. I'll do it for you. So it kind of like equaled things a bit. But the things that were important before and are even more important right now is identifying what needs to be done, looking at the real world constraints and figuring out like a top level strategy, how to get there. What if this doesn't work, then do that. What to prioritize right now, those are still super important and should remain important in like the time to come, because if we don't even have that, then what are we even doing? So yeah, I think that's gonna remain important for long.
Yeah, these are great points. And our next question actually is not about the future, it's about like right now. Are AI agents a tool or are they already an economic actor?
So right now they're a tool. It's very hard to say they're producing value on their own of their own accord today. Or at least if you, I don't know, maybe Shashank, you guys have examples of this that work, but I haven't seen that.
It's a tool for like few weeks. After that, it's gonna be an economic actor.
All right, so flash news, everyone, pay attention. And our last question is basically just finish the sentence. Crypto wins when it's finally. Crypto will win when it's finally.
Properly regulated.
Okay.
I mean, there's a lot of things you could say there. Probably trustworthy or cool, depending on who you're targeting.
Yeah, I think both of them important. All right, so this is the end. Thank you everybody for joining us. Thank you, Shayon. Thank you, Shashank. Please follow our guest and Multicoin Capital, and see you guys next week.
Thanks a lot, man.
Thanks, guys.
Bye. And it's